Okay, so let's mark our end of the day chart going candle by candle and talk about price action and how price action needs to almost force us into a trade, and price action telling us how much leverage we should enter that trade with. And one of the things I've often said, I wonder if I would be a better trader if I deleted every line off my chart. And every day I started with 0 lines and I only traded the newly created lines. Because when we do our end of the day charts at the end of the week, we typically have 10 to 40 trades with one loser. That's not a bad percentage. So let's play this candle by candle. Actually, let me use my Stream Deck so I don't mess up. One second here. Okay, there's my button to go one candle at a time. All right, so as we're watching here, my thought at this moment is this could be a potential level. Could be a potential level. You have to be careful about drawing it too early because it will tempt you to trade it. So if you do draw it early, just move it out of the way. That way you know it's not a level yet. Why is this not a level yet? Anyone?
2 candle clearance.
That is correct. Thank you, whoever said that. We do not have 2 candle clearance yet. So let's hit our next replay. How many candle clearance do we have now?
One.
One. That is correct. So just for the new people, I'll draw this. How many full candles do we have under that level? One. Where it opened, closed, the whole thing, just one. We need 2 candles in order to draw that level. And let me hit the replay button here. Oh, so we can draw this. I can also add my break level there. Okay, same type of situation here as was up there. This could be a possible level, but it's not because we don't have 2 candle separation yet. But I need to visually start seeing that. I also need to visually start seeing that this is a possible break level. I wouldn't quite put it there yet. So let's hit replay. Now we have just 1 candle separation. I think I'd feel comfortable making that a break at this point. Now we have 2 candle separation and inside of a fair value gap. Okay. We're liking. Obviously, we're starting a ladder down sequence. So if you were to kind of have your own little arrow down, what's the most optimal trade? It's a short. And in fact, boy, this is really great. Because there are no pre-existing lines here, you're not even tempted to go long because they're not on your chart. That's an interesting thought. Okay, now at this point, 1, 2, 3, 4, 5 candles. One of the questions you have to kind of start asking yourself, if price comes back here, do I want to go short? How must this price action return to this level for me to go short? You know, it is 20 points away. If price makes it back to this level, has things completely changed because now it's went 20 points the other direction? Those are some things to ask yourself because as price gets further away, other variables start entering into it. I wish we had 2 candles, and I wish this third one had went right back up, or this fourth one would have went right back up. But now we're on a 5th candle, so It just adds some interesting questions. Okay. So what do we have now? We can probably say we can add a break level there. Same situation here. We have a fair value gap. We have a level, but it's not a level yet. We only have one candle clearance. So just know that's what I'm going to draw next, but maybe I'll move it out of the way. Okay. At this point, you have two candles. What should be a thought I have in my mind at this moment? Anyone? We have two candle separation, but how much separation do we actually have? Very little. Less than 2 points. If price came up right now and hit it, would you want to take that short? Anybody want to take a stab at that answer? And not that it's a correct answer. It can be the correct answer for you.
Bigger picture. Stop trading.
All right.
Stop trading.
So if the next candle came up and touched this, I'd be thinking two things. Good call, Johnny. One, I would enter one MES, smallest leverage possible, because I want to be in the trade. Why do I want to be in the trade? We're obviously laddering down. That might be my only opportunity to have gotten into the trade. So I would do a singular contract here. Maybe add a contract at the break. And then I would be in the trade with two contracts, and I would feel comfortable with that. I wish I had more separation, but I don't. Because one of the things to notice is, did the backside develop? Nope. The backside did not develop. So this is a higher risk entry. Higher risk entry. Or you could just be extra disciplined and go, no, I want more separation. I honestly don't know what's going to happen. So let's just hit replay. Oh, I like the additional separation. I really like the additional separation. All right. This here, I'd be getting pretty excited. I'd be saying to myself, okay, if it does not hit it on the next candle, I'm out. And I might have even said it on this candle. You need to come up and get me. Why? Because I have three candles right here that camped out right underneath my level. So I'm not really in love. Would I be a short? Yes. Why? Because we're laddering down. I'm willing to go small just to be in the short. And after this point, I'm not taking the short. If I was to take the short, it would only be at the break level. Definitely not interested in the short. All right. Price is kind of going away. So what do we have again? We need two candle separation. Technically, you got two candle separation. What's the problem? There is no clearance. I'm not taking this trade at all. I don't care if there's a line. I don't care if it's a fair value gap. There's not enough distance. There's not enough price movement south. So I'm not interested in that trade. I could care less what it does. And now after seeing that camp out like that, there's no way in the world I would have been in that trade. Let's continue with this until it runs out of candles, and then we'll go back and mark our levels. Ah, I missed this one that Craig talked about. That's why this is hard to do sometimes. I missed that. And so let's talk about this. We're laddering down. I missed this entry, but we're laddering down. Do we want to take the very first opportunity to go long when you're laddering down? I would say that's part of our core strategy rules of no, I do not want to take the first long when we're laddering down. I only want to take the second or third bounce when we have a confirmed laddering up pattern. Do not take the first. That's it. That's how your chart should look at this very moment, probably. If you wanted to throw in a break level here, you could. You want to throw in a break level down here, you could. And that's pretty much what your chart should look like right now. And then if you wanted to, you could draw this and say, I'm not trading until we get out of this chop zone, one way or the other way. So that's how I would have tried to analyze that. We have a little bit of benefit of hindsight because we just lived it. A little bit of how price action tells us whether or not we want to enter a trade, because this is a level. It's inside of a fair value gap. You had 2 candle clearance. How much did it clear? At the top of the candle, 6 points, 3 points. One day somebody really wanted me to give them a number. How far away would you like to see price go? I think the number's 5 points. Any of my legacy people have any insight in what you would want to see as far as a gap in price? Because this has only it has 2 points and 3 ticks. How far would you like to see it go away? Any insight in that, Dave, Vasily? Anyone else in here? Legacy guys? Nobody speaking. Go ahead.
I'm not sure if I've ever really looked, I've ever put a number on it, so I'm not sure.
Me neither. I was asked last week and I'm like, I've never put a number on it. I just want a nice visual distance. Vasily just threw in a monkey wrench. Depends on volatility. So to me, this is like marginal. It's right there on the edge. If this was the second or third ladder up, I would take that every day of the week. Let me give you that price action scenario. So let's say this was one, two, and this was the third. I would take that all day long. No problem. As a first ladder up, no thank you. More important to me is a developed backside. 100% agree. So let's talk about what Vasily just said and what I've said several times as well. You have, in my opinion, this valley, because you basically got consecutive blue candles coming all the way down. I consider these all part of this valley. You not only don't have a developed backside, it didn't even get back to the backside. It just went halfway up this range and started coming down again. Do I want to go long with weak price action? No. What should we be looking for ideally? Ideally, oh, I love that candle there. I would have loved another nice candle. I would have loved another nice candle. I would have loved another nice candle. I would have loved another nice candle, because then I could have taken this long. That is going long with strength. That's off a backside. This is going long with weak strength. Does that make sense?
Yep.
And you have to see it lots of times. And what do you have to do? You have to do your end of the day charts. If you guys just finish the day and wait for me to post your end of the day charts, your progress is going to be 10 times slower than someone else doing their own end of the day charts. Then you throw in the guy who says, okay, at the end of the day, I'm going to walk through this 3-minute day, candle by candle, just like we just did. And on the weekend, he's going to go back and do it again. Monday, Tuesday, Wednesday, Thursday, Friday. He's going to rewalk every day. That guy is going to be 10 times better than you in just a month. You're going to be like, how did he get it? He's just getting it. No, he just worked his tail off. So he can see these patterns over and over. So official 3-minute end of the day charts. I'm going to mark it, but I'm going to also add the note. Don't take first ladder up. And the other note could easily be no backside development. You could also, I'm on a 3-minute, I am. You also have this. What note will I add to that one? I'm going to put, I don't like this sideways action. I want to see it go down and come back. Not great level development is what I would call it. Not great level development. Now, both of those trades worked out. If you took those trades, price action should be telling you one MES, my opinion. You might be in a different league of money, and one MES and one ES is nothing, and that's okay. But just adjust your leverage accordingly to what the price action is telling you. Because in both of these cases, what is missing? There was zero backside development. Zero backside development. I want to go over that again. I was going to ask, did anyone want me to go over it? But I'm going to do it anyway. Tuesday, December 6th. I'll put all those in a folder, turn them off. So let's okay. Here's a decent example. So let's take this entire valley. Forget what's happening inside of this. What I want you to see, price went away, and then it came back to the backside. This had backside development. Price was allowed to get out of this valley, and we had backside development. So price came down and it went up, and then it came back down to this level. At this moment in time, there was no backside development. This should be smallest leverage if you're going to take this trade. Now, you know what I would say about this trade. I don't like how we camped out. But if I was going to take this trade, which as I'm looking at this entire picture, one ladder up, second ladder up, I'm taking this trade. Even though I don't like this, it's a second ladder up. I'm going to do it with one MES because I don't have backside development. I don't like how the candles camped out. So this is smallest leverage possible. Then got lucky. Price shot up really strong. Developed the backside. This is where you go long, much larger. This is a better trade location. I had backside development. This is the weakest trade location, although this trade might have made me more. That's awesome. I went small. And I benefited from a 10-point run. And here, instead of one contract, I might have went long with 30. And I made 30 times 4. I made 3x because I was able to leverage up because of a better trade location. I was able to add to my trade with backside development. So when you don't have backside development, let's go back and look at our example today. I'm going to cut it off right here. Same scenario. Here is the V. What would we want to see price action do? Whoops. Up. 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 Now I have backside. And now price can come back and hit. I can go long. This is the exact example we just looked at. Price came down, it went up, it came down and hit a level inside of a valley that did not have a backside developed. This should be the smallest leverage possible or no trade at all. Why is this a better no trade? What's the difference between this and the other one? This is the first ladder up. And I forgot where it was. It was the third ladder. It was the third ladder up, if I remember, on our previous example. Maybe you can go back and watch this recording. This is the first ladder up with no backside development. This is I know I'm not entering this trade. It's just a rule I have. I'm not entering this. I need to see it start laddering, and probably on the second ladder up or the third ladder up, I will be entering much more aggressively. First ladder, 0 leverage.
Thanks, George.
And where would that change? If we develop the backside. Who said that?
Brian.
Oh, thank you, Brian. Does that make sense, guys?
Yes,
Was that valuable?
That helps a lot.
for sure.